Good evening, everyone. Welcome to our weekly investor update. I'm your host, Dan Theok, SVP of Investment Banking. It's good to be back for this week's investor update. If you're a regular viewer, you'll be well acquainted with Justin Scott, investment advisor here at Mayberry Investments Limited, and my co-host for today's discussions. Welcome, Justin.
Glad to be here, Dan.
He and I will be presenting on CAC 2000 Limited and Jamaica Brawlers Group Limited shortly, so stick around for that presentation. If you're a fan of the content, then don't forget to hit the bell to stay up to date with the channel. We upload content like this every week. Also, if you're looking to embark on your very first investment journey, you should take that step first with Mayberry. Follow us on social media to learn more about how you can get started today. With that said, we'll now begin our presentation on CAC 2000 and Jamaica Brawlers Group Limited. First up, CAC 2000, which will be presented by Justin.
CAC 2000 is an engineering company, if you haven't heard of it before, right? So the existing company, as we know it, was incorporated in Jamaica in July 2000, therefore putting them just about on the cusp of their 22nd anniversary in Jamaica. They're one of the country's leading providers in commercial air conditioning and servicing. So the company states that their primary activities are to provide energy and outdoor and indoor environmental quality solutions. They're not just selling the AC units. They're actually a full-on engineering company based on the actual expertise of the people within the company. They've been doing this for 20 years now, and as well as they're the sole distributor of the Carrier brand, which has been leading in AC units in terms of the developments, in terms of the quality of the systems that are actually worldwide, that are internationally renowned, right? And the Carrier brand has been in business since 1929, and as a sole distributor, they are very off way with the actual equipment. CSC in April 21st, 2000, they actually did revenues of 508 million, and they increased that to 535 million in the end of their second quarter 2022, which is a 5% increase. The gross profits went up 14% from 207 million to 236 million, and then the actual net income moved from 8.7 million to 13.7 million, which is a 59% increase, which is actually really good for them. They managed to really cut down on their operating expenditures and really honed into that. Let's actually dig down into things a little bit further, talking about the ratio. So the PE ratio as a closing price of $9.83 is about 28.25 times, which is a little bit rich when you look at the junior market averages, which is about 19.25 times. But if they can continue at the same pace of increasing their net profits so exponentially, then I'm sure they'll be cutting that down quite soon. Especially if they have any new ventures underway, especially if they have any new projects that they can really take a hold of, whether in Jamaica or outside. So further from there, the 52-week high for the company actually was out about October 2021, I believe, when it was at about $11.50. 52-week low of $6. Oh, and with a market cap of $1.2 billion, it is, really coming to their own. But I'd like to see a little bit more from CAC. Let's dive into the quarterly profit movements. I want to dial back the profit movements back to about early 2020, when they would have went through a little bit of some challenges, right? As you can see at the end of Q2, which would have been at the end of April in 2020, they had recorded a big loss of about $22.8 million. But however, in the following 3 quarters, they had actually done a lot more in terms of profits. And you may be wondering why that was still in peak times of a lot of issues in Jamaica. This is actually a company that would have been benefiting from that particular period, because while the tourism industry was down, we had our borders closed, we weren't really getting as much business towards the hotel sector. You find that a lot of the companies, a lot of the hotels would have been servicing and refurbishing the actual equipment that they do have. Because remember, guys, they're not just selling the AC units. They also do preventative measures, maintenance programs, repair services. They do consultations and a lot of other things that are very much in tune with the businesses, right? So during that time when the hotels were down, CAC was working, as you can see from that big jump in profit in the 2020 Q3, right? 28.8 million. It did not a little bit further in the Q4 to 25.3 million before settling off again at about at 7.9 million at the end of their Q1 in 2021, right? Which would have been marking of when, we actually started to get more business and more people are there. So the more rooms would have been occupied, so they'd have less time for repairs, or they may have just been done with or the hotels that were interested in servicing would have just been done at the time. And you can see a little bit of, low to flat earnings over that little while before they really started coming back into the strides at the Q4 2021. They had a loss again in 2021's Q1, but then, they really jumped up again. So they're having some sporadic profits from here and there. I hope they can get that a little bit more under control so we can, have a bit more stable view of the company. But, I'm optimistic on seeing how they can provide further from there. Next up, we have the share price movement, as we have referenced. They did have a high in December 2021, not October, my apologies, of 11.19, before gradually just taking a little bit of a slide down to a low of $6 in April 2021, and then the high and then the close price of yesterday of $9.83. So CAC is a little bit of an interesting company. I like what they do. I like the business. But at the moment, if you're a current shareholder, I would say it's more of a hold for me, maybe over the next year to 2 years. But yeah, I do like the company as it is, and I'd like how they can continue to expand further. And I would prefer to see a lot more aggressive corporate actions from them, maybe some mergers, some acquisitions, maybe some more joint ventures. But that's about it from me today. Dan?
Right, so Justin, yeah, I'm inclined to agree with you. I see this one as a whole. It's trading a bit richly at a 28 times PE. My expectation is we'd want to watch the results for the next 2 quarters to see if they're really going to bounce back strong. We've seen some inconsistencies with the earnings throughout the pandemic up until this time. But it's a solid company, great opportunities in the hotel market, BPO market, like you highlighted. They really are strong in the space in terms of providing those energy solutions and air conditioning. Good units, good brand. So this one's a whole for me. I'd like to see them grow into that earnings over the next 6 to 12 months. I expect to see the PE normalize around about to 20 times, which is roughly the market average, but they've got to step up on the earnings to get there. They've got a quarter of losses that will disappear in the next 3 quarters, but they also have to keep the earnings there as well too. So yeah, I agree with you. I see this one as a hold. Okay, next up, Jamaica Brothers Group. Okay, and this one's one of my favorites, guys. It's definitely in my top 10 long-term portfolio, and it's great to see the results bouncing back strong to justify their presence as my top 10 pick. So revenues, 75.7 billion, up 33%, and interestingly, in the 2 largest segments, both in Jamaica and in the US, we see pretty strong growth, 33% growth in Jamaica, 40% growth in North America. Haiti, they're having some difficulties there. We actually saw a fall in sales in Haiti, but fortunately, that only makes up about 2% of their sales, so that doesn't concern me too much. Obviously, a challenging market, but overall, in the largest segment where it really counts, Jamaica and in North America, they're doing exceptionally well, with sales from the US now getting up to about 45% of total revenues and growing. 40% growth in North America, so that's pretty impressive. So 33% growth in sales, 23% growth in gross profit, so that means we saw a tightening of the margins by a little bit, which isn't surprising knowing the increase in commodity prices. And remember, these guys import a lot of the feeding and medicines to support the chickens and whatnot, so we've seen huge increases in commodity prices for grains. So I won't be surprised if we don't see price adjustments coming in the future. But they've done exceptionally well growing gross profit by 23%. And by containing distribution and O&M costs by 12% and 14% respectively, what we see, 23% respectively for admin costs, what we see is a 27% growth in their profit before tax, and importantly, 28% growth in their profit after tax growing to $3 billion, up from $2.4 billion for the prior year. So that translates into earnings per share of $2.61, and with a share price of $28, that translates into a PE of 10.7 times in a main market where I like to think of the average PE at 14 to 15 times. So from my point of view, this stock is trading at a 30 to 40% discount to the main market PE. And I think with the increasing trend in interest rates and some expectation that PEs may tighten up a little bit over the next 12 months, when you're choosing stocks, you have to look for good, solid companies that are growing, because it's the growth rate that will help to justify higher PEs. And you still want to look for good buy opportunities such as JBG at 10 times or JMB at 7.5 times or even NCB now at 10 times. You want to be looking to buy companies that are on the lower end of the PE scale but still have good growth potential, as opposed to buying companies that are above the 14 to 15 times average for the main market stock. So great company, great opportunity. I recommend this one as a buy. $33.6 billion market cap, trailing earnings of $3.1 billion. It's traded at a high of $37, a low of $25. So again, at $28, I think this one is a good buy. Really solid company. Look at the growth in assets, folks. They've grown their assets by 17% to $60 billion and grown their shareholders' equity to $21 billion, up by 13%. So really solid balance sheet, relatively low debt, fair amount of cash. They're poised to continue growing in North America and in Jamaica. So when we talk about growth in the tourism sector, there's an opportunity for them to grow their sales as well too. The hotels buy their chickens from both them and their competitor, but they have good amount of market share in that space as well too. On to the next slide, we look at the quarterly performance, and JBG too was impacted by the pandemic, and we saw over the last 2 years periods of quarterly earnings dropping below $300 million on 3 or 4 occasions. But what we've seen in the last 2 quarters, where they've turned $3 billion in the last 4 quarters or a year, but in the last 2 quarters, earnings have been over $1 billion each per quarter. So they've gotten back to sort of the pre-pandemic levels. And so also we had $3 billion profit for the last 4 quarters. I see a good setup for them to top $4 billion for the next 4 quarters based on the last 2 quarters trends of them being over $1 billion in each quarter. So really excited about looking at the next quarter or 2 for JBG. I have every expectation that they're going to hit $1 billion in the next quarter, and that we're going to see the share price easing up by 20 to 30% in the next 3 to 6 months. Looking on the next slide, we'll look at the price history again. You can see when the stock peaked at $37 in July 2021. That would have been a very high PE, quite frankly, around 15, 16 times back at that time. Actually, more like 18 PE back at that time. So traded a little bit high throughout the pandemic. Now we see the price coming down, and it's trading actually a little bit low. So there would have been some doubts about the results. Again, going back to the previous slide, where we saw quarters where earnings were as low as 300 mil or low. But there's no doubt that they're back, because you can see in the last 2 quarters, as I said before, that they're topping $1 billion per quarter. So look forward to their July results, where I'm going to predict they're going to do reasonably well again because of the summer and tourism's back with a vengeance. I'm going to predict we're going to see over $1 billion in the quarter, and then that would, if the price didn't adjust itself, have the PE going below 10 times, which is what I would not expect. In fact, I expect this PE to adjust up to at least 12 times, 13 times over the next quarter. So I'm expecting 20 to 30% growth in the stock price, even if profitability were flat. But I think the profitability is going to continue to increase. I think because of increases in commodity prices, that they would be well justified to be looking at some price adjustments. We don't have data on the competition in the form of CB, but I have every confidence that they're both facing the same type of pressures with commodity prices, and that they would have no option but to look at price increases for the future. So great leadership team in the form of the Levies, whether we're talking about Chris or Robert or Chris's brother over in the States running that side of the business. Those guys have great vision. They've been doing this for over 30 years, and I have no doubt in 30 years they're still going to be here stronger than ever, growing and expanding as usual. So definitely a buy for me. I really like this one. It's in my top 10. Justin, what are your thoughts on JBG?
Yeah, thanks, Dan. All right, so yeah, I think Jamaica Brothers is in a good position right now. I do believe commodity prices have been trending a little bit lower recently as the supply chain issues start to ease up a little bit further, as well as with the geopolitical situations getting closer and closer to being sorted out, in my own opinion, out in Europe. So with that being said, I think they're going to be a little bit better off now, considering with getting their raw materials to further, develop And prices are a little bit sticky upwards. So when they're getting materials at cheaper costs, and they maintain what they are right now, as soon as we get back closer to the equilibrium, right, they should be seeing increased profits on that side of things. I know they're having a little bit of issues working out things in Haiti, but I do believe with the operations in North America and in Jamaica right now, as we said, as we've been laboring the point, tourism is here, it's back with a vengeance, right? So these are the things that are really going to start to push them a little bit further, right? As we said, we're going to be having more rooms in the hotels, we're going to be having more visitors. I would not be surprised if at the end of this year we actually do close out in very similar or above the tourism numbers that we had in 2019. And so these people are going to need somewhere to stay, these people are going to need something to eat, and Jamaican chicken, right? You can't go wrong. So
Absolutely.
right, so it's gonna be looking great for them. I do have it as a whole, and for sure, man, it's good. It's looking good for them.
Good deal. All right, well, you heard it from us, JBG and CAC 2000. Okay, up next, Justin will now bring you some valuable insights from our special segment. Over to you, Justin.
All right, guys. So for closing it out here today, I want to leave with the point to keep things simple. If you're in finance and you're watching this, you probably have a tendency to try and overcomplicate things, or maybe you're just a person who likes to go through all of the details and like to label these details, and it starts to bog up your mind. But no, you can't. You can't be doing things like that. You need to be able to assess things rationally. You need to be looking at things for what they are, not what you want them to be, not what somebody tells you they are. You need to look at things for what they are, right? So when you see the signs all around you, you see what is happening. Even recently, last weekend was the Carnival weekend. That is a major point for people in the economy, right? So you would have people even flying in from other countries to participate in our Carnival celebrations. That's great for the economy. It's great for commerce. It's great for the underground economy. It's great for the service economy that we have here, right? But as well as it also impacts some of these listed companies. Main Event Group was a part of all of these celebrations. They would have been working on all the events. You have companies like with Cinco. You have all of these other Grays. All of these companies that have to service the surplus of people that are now going out and about, right? As well as if you have people flying in for Carnival, you have people flying in all over Jamaica for several different reasons, right? You can see these things, you can see it around you. You're probably hearing it to points, but it may not be taking it in as deep as it can, but all of these points are adding up, right? Look at what's around you, keep it simple, and back it up with the information to ensure that what you're seeing is really what's there.
All right, thanks for that, Justin. I like it. KTS, keep it simple. Well, that's it for today's discussions, folks. I'd like to thank our viewers for tuning in today. Your support is always appreciated, and I'd also like to thank my fellow panelist, Justin Scott, for his invaluable contributions.
Much appreciated.
If you're curious about updates on our virtual investor forum, then find us on social media. We share our live stream dates and upcoming guests on our official social media pages. So follow us there for all things forum related. Also, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Keep safe, folks, and remember, wise investors, slow and steady wins the race. Goodbye.